Let's talk about the commodity prices now, where we have seen a bit of a jitteriness ahead of the G7. We've seen a sell-off in most of the agro commodities as well, where you have the cotton prices at around 31-month highs. But it really is sugar which is still making a buzz. In Indian markets, the sugar prices are trading at a 2-month lows, while the international prices or the New York prices are trading at a 2-year lows. Let's get in with us Avinash Verma. He's Director General at ISMA, and he joins us right here in our Mumbai studios. Avinash, hi, welcome to the studios and welcome to Mumbai as well. How are the sugar prices? Let's start with that one, because there has been a considerable decline, and monsoon is a time when you don't see much of a demand coming in as well. Where do you see the prices headed?
The prices have been falling for the last couple of months, both domestically and internationally. And since the exports have been freed up in the last about 1.5 months or so, we were expecting that the international prices would get in tune with the domestic prices, and that is what is happening. But fortunately, the international market is still offering a viable export from the for the Indian sugar, and we expect to continue to export at about 3 to 3.5 lakh tons every month.
What's your sense on where the prices could be headed? As of now, of course, we've seen them continue below that cost of production. Do you see that trend continuing?
No, the below the cost of production has been continuing for the last several months. In fact, the whole year the sugar prices have been below the cost of production. But still, in the last couple of months, it has been coming down. And we feel that the fundamentals are fine now. We are under not much pressure to really pay to the farmers, because the crushing season is already over. So it's now time that we continue to sell our inventories, we reduce our sugar inventory. So I don't see any pressure on the prices any further. So the prices now will stabilize at the level.
You know, while the crude prices have come down, the Indian petrol prices are on the higher side. And how have you read the ethanol story? Because it was before 12 years that the government had allowed, but it really hasn't taken off as the markets or the industry thought it would.
Yeah, that's a very sad feature of the ethanol blending program in the country. The government has made its intention very clear as way back in 2002. But then again in 2007 they went in for a mandatory 5% blending, and they again reiterated the whole thing in 2009 or so, and fixed a provisional price of 27 rupees. Unfortunately, that provisional price of 27 rupees continues to be provisional for the last 2 years, despite an expert panel under Dr. Soumitra Choudhury, the Member Planning Commission, submitting a report almost about 14 months back, and still it has not been accepted. So the basic problem is we are getting a price of almost 38 rupees if we export ethanol. We are getting a price of about 38 rupees for our alternate products that we make from molasses, but we continue to get just about 27 rupees for ethanol. So commercially, the sugar mills don't find it really very viable to continue to supply ethanol to the government. So the basic point that we will look at, the request to the government would be to ensure that the Soumitra Choudhury committee report gets accepted very, very fast.
You know, that's been a concern in all these months, as you rightly point out, or years. But how is the future trajectory looking to you, especially when the government is open to deregulating sugar in smaller phases, even if not a huge step there? But do you see that coming in future?
Oh yes, Dr. Rangarajan committee has already been deliberating over it for the last 6 months, and we understand that they're already started preparing the report. They made the intention very clear that they would be submitting the report in 6 months' time, and that should be getting over by end of June or the middle of July. And we did make a presentation to them, and we thought it was a very, very nice open discussion, very positive discussion. And we feel that most of the regulations, which are very unfortunate, typical only to the sugar industry, which is actually binding us down and not ensuring that we grow at a faster pace, which are actually pushing us, making us uncompetitive in the world market. All these controls we are expecting that the Dr. Rangarajan committee would be recommending, and we would be recommending very positively.
So lots of steps that need to be taken. But Avinash, just drawing your attention to that chart that we have on here, 1 month, and we've seen 4.5% of decline coming in for sugar prices. That's a 3-month chart which has seen a considerable decline as well. So nearly 5% down in 1 month, and this is coming in even as the exports have been freed, and a lot of steps have been taken in sense of monthly and quarterly quota as well. Even then, not so much of a respite for prices.
That's very true, very unfortunate, I would say. We continue to hold on to a very high sugar inventory. But as I said, the inventory is going to now reduce slowly and slowly over the next couple of months, because we will start our season mostly from the second half of November. So it is, I would say, sugar sale time. There is not much pressure on us to really go in for some kind of a distress sale. So we expect the prices now to stabilize. It has come down, which is very unfortunate, but now I don't think it's going to go down any further.
All right, Avinash, thank you so much for joining us, taking time for us. So that's the sugar prices and view coming in from Avinash Verma, DG ISMA, where he says that they are expecting more positive steps to come in for sugar and ethanol industry in the coming 6 months in 2012 itself.